Welcome back to Social Security Post. We break down the complicated world of money and taxes in a way that is simple and easy to understand. Today, we are diving deep into one of the biggest tax bills ever passed, known as Trump's Big Beautiful Bill. This new law brings some of the largest tax cuts in American history and has the potential to change how seniors, working families, and even business owners handle their taxes in the coming years. There is a lot of confusion and a lot of frustration about what this bill really means. So in this video, we are going to explain all about taxes you want to know in clear, plain language without any complicated terms. If you have questions about anything we discuss, please leave them in the comments below because I will personally reply to you. Also, do not forget to like this video and subscribe to Social Security Post so you never miss important updates about your money. So this video will go through every big change in the tax bill step by step, from lower tax rates to deductions for seniors, bigger credits for children, car loan interest rules, and even tax breaks for overtime and tips. We will also cover the business side, including deductions that could help self-employed people and entrepreneurs save thousands of dollars. You are going to learn what these changes mean, how they can help your household, and what you might want to do next. Whether you are a retiree on a fixed income, a working parent trying to stretch every paycheck, or someone running a small business, this information could save you real dollars. Again, please, if any question comes up, write it in the comments and I will personally get back to you. So sit back, relax, and let's get started on making sense of Trump's Big Beautiful Bill together. One of the most important pieces of Trump's Big Beautiful Bill is the permanent reduction of individual tax rates, something that affects almost everyone in this country. You might remember that back in 2017, tax rates were lowered across the board, like bringing the 39.6% rate down to 37%, dropping the 25% bracket to 22%, and lowering the 15% bracket all the way to 12%. These cuts were only temporary, set to expire in 2025, which had many people worried about paying higher taxes again in the future. But this new bill takes away that uncertainty. It makes these lower rates permanent so you can plan your financial future with more confidence. That is a huge win for seniors on Social Security who also have some taxable income, for working families who are already stretched thin, and for everyone trying to hold on to more of their hard-earned dollars. By making these lower tax rates permanent, the government estimates that about $2 trillion will stay in taxpayers' pockets over the next 10 years instead of going back to Washington. That is a lot of money for people to use on groceries, housing, medical bills, or simply putting a little bit more away for retirement. It means you do not have to fear a sudden tax hike in a couple of years, which is a big relief for many older Americans and younger families alike. If you depend on Social Security but also work part-time, these permanent lower rates can help you keep more of your paycheck. If you have a pension or other retirement income, it could help you avoid bumping into a higher bracket. This section of the bill is truly a centerpiece because it impacts nearly every taxpayer, and that means it deserves your attention. Please stay tuned because in the next section, we will talk about another change that could keep even more dollars in your pocket, the standard deduction. Another powerful part of Trump's Big Beautiful Bill is the permanent increase to the standard deduction. Let me break this down for you clearly. Back in 2017, the standard deduction was basically doubled to help more people keep more of their money without worrying about tracking receipts or hunting for itemized deductions. For example, single filers went from a standard deduction of about $6,000 up to $12,000, and married couples saw their deduction jump from around $12,000 to $24,000. This was huge because about 90% of taxpayers choose the standard deduction rather than itemizing. The problem was that this expanded deduction was set to expire after 2025, which had many families concerned about paying higher taxes down the road. The new bill steps in and makes this higher deduction permanent, meaning there is no longer an expiration date to worry about. This is really important for seniors on fixed incomes, folks with modest wages, and working parents trying to balance rent, groceries, and medical costs. With a higher standard deduction locked in for good, you can count on more tax-free income every single year. For example, if you are a senior who earns a bit of money on top of Social Security, this permanent deduction could save you thousands of dollars every year without any extra paperwork. It also takes away stress for people who do not have time to track every expense. In addition, the bill makes a few upgrades to itemized deductions for those who do qualify, so no one is left behind. Overall, this is a change that will help nearly every American taxpayer in one way or another, giving them more breathing room in their budget. Please keep watching, because next we will dive into changes for the SALT deductions, which could be a game changer for many people living in high tax states. Okay, let's move on to another big change that could really help taxpayers, especially those living in high tax states like New York, New Jersey, or California. The new tax bill raises the cap on state and local tax deductions, which are usually called SALT deductions. Under the 2017 tax reform, people could only deduct up to $10,000 of their state and local taxes from their federal income taxes. For many homeowners and residents of expensive states, this was a major hit because their property taxes and state income taxes are often far higher than $10,000. Trump's big, beautiful bill raises that cap dramatically to $40,000, and this new limit will stay in place until the end of 2029. That is a massive shift. It means that if you pay high state income or property taxes, you can now write off a much larger share on your federal return, which could save you thousands of dollars each year. Think about what that means for seniors on a fixed retirement income who own their homes in a high tax state. Many of them pay more than $10,000 in property taxes alone, and being able to deduct up to $40,000 is a relief they truly need. It also supports working parents who are paying hefty state taxes on top of their mortgages, giving them a much bigger break to help with food, utilities, and education costs. This change will make the itemized deduction route much more attractive to millions of taxpayers, especially those who are forced to stick with a standard deduction because the SALT limit was too low. It puts more power back in the hands of taxpayers and helps level the playing field between low tax and high tax states. Please stay tuned, because in the next part, we will talk about a new deduction you might not have heard about yet, the car loan interest deduction, which could be a surprising benefit for people buying American-made vehicles. Here is something many people have not heard about yet: a brand new deduction for car loan interest, included in Trump's big, beautiful bill. For the first time, taxpayers can deduct up to $10,000 of interest paid on car loans for newly purchased American-made vehicles. This provision is available through the end of 2028, giving car buyers a few years to take advantage of it. That means if you finance a car that is built here in the United States, you could get back a significant chunk of the interest you pay, making it much more affordable to buy or replace your vehicle. There are a few rules you should know about. First, there are income limitations depending on whether you file as a single taxpayer or jointly with your spouse. So high income earners might not fully qualify. Second, the deduction is designed to encourage people to buy American-made cars, which is why imported vehicles will not get you this break. This change could be really meaningful for seniors who need a safe and reliable car, especially if their old vehicle is worn out. It could also help working families who depend on their car to get to work or to take their kids to school every day. You do not need to itemize deductions to claim this, which makes it even more flexible and easy to use. Think about it. $10,000 in interest deductions could save you real money each year, helping you keep more dollars in your pocket for groceries, prescriptions, or just peace of mind. For a lot of families who are feeling squeezed by the cost of living, every little bit counts. So if you are considering trading in your car or buying a new one, especially an American-made model, it might be worth doing sooner rather than later to lock in these savings. Up next, we will talk about a change that could help families even more: the bigger child tax credit that might put serious money back in your budget. Let's break down one of the family-friendly changes in Trump's big, beautiful bill, the expansion of the child tax credit. Before this bill, families could claim a credit of up to $2,000 per qualifying child, which was already a big help to working parents trying to pay the bills. However, this credit was scheduled to shrink back down to $1,000 after 2025, which would have meant a painful tax increase for many families. With this new bill, though, the child tax credit not only stays in place, it actually grows. The credit is now increased to $2,200 per qualifying child, giving parents even more breathing room at tax time. Over the next decade, this change alone is expected to save families nearly $800 billion in taxes. It is a big deal if you are trying to raise children in today's high-cost world of daycare, after-school programs, and expensive groceries. There are still some income limitations to be aware of, which means the credit will start to phase out for single taxpayers earning more than $200,000 and for married couples earning more than $400,000. But for the majority of working families, this expanded child tax credit will be a much needed relief. It will help with the cost of raising children and maybe even free up a little bit of money for savings or fun family activities. If you are raising grandkids or helping support young relatives, this credit could also apply to you depending on your tax situation. Every dollar counts when you are trying to give kids a good start in life, and this increase is a clear win for parents and caregivers alike. Stick around because next we will dive into how seniors specifically will benefit from a larger deduction in this bill, one that could help those living on a fixed income hold on to more of their money every single year. Now let's talk about something close to the hearts of many in our audience, seniors who have worked their entire lives and are now living on a fixed income. Trump's big, beautiful bill includes a very important upgrade for them. Previously, seniors over the age of 65 were entitled to an additional deduction on top of their standard deduction, about $2,000 for individuals and a bit more than $3,000 if filing jointly with a qualifying spouse. But with this new bill, that senior deduction gets a powerful boost, increasing to $6,000 for each qualifying senior. That is a major improvement, and it will go a long way toward easing financial worries for retirees. The reality is that a lot of seniors still pay taxes on retirement income or on part-time wages. Even though they are also relying on Social Security, this bigger deduction means they can protect more of their income from taxes, giving them more dollars to handle housing, medication, and groceries. There are still income limits to keep in mind, so if you have higher taxable earnings, the deduction could phase out. But for the majority of seniors, this will be a welcome and needed benefit. Even though this bill does not completely eliminate taxes on Social Security income, which many seniors were hoping for, this bigger deduction is at least a step in the right direction. It acknowledges that seniors face rising living costs, whether that means paying higher property taxes, coping with expensive healthcare, or even just managing energy bills. By boosting the senior deduction, the bill helps older Americans stay more financially stable and independent. Every single dollar that stays in a senior's pocket is a dollar they can use to improve their quality of life. Next up, we will dig into a benefit for workers who put in extra hours, a tax break on overtime pay that could mean more dollars in your pocket at the end of a long week. Let's now look at something that will matter to a lot of hardworking people putting in long hours, the tax break on overtime wages. Under Trump's big, beautiful bill, overtime pay will not be completely tax-free, but there is a valuable new deduction you should know about. The bill allows certain taxpayers to take a deduction against their overtime wages, up to $12,500 for single filers and up to $25,000 for married couples who file jointly. Now, that means if you work those extra hours to help cover rent, food, or unexpected medical bills, you can keep more of that hard-earned money in your own pocket instead of sending it to the IRS. This deduction does not remove all taxes on overtime, but it can significantly lower the amount you owe, which is still a major benefit in today's economy where every single dollar counts. There are income phase-outs to watch out for with this provision. If you are a single taxpayer earning more than $150,000 in taxable income, or a married couple making more than $300,000, the deduction will start to shrink and eventually disappear. But for most workers who do not hit those higher income brackets, this is a great chance to see some real tax relief. Overtime often comes during busy seasons or emergencies, and it can feel unfair to be taxed heavily on it. By giving you a deduction on these wages, the bill recognizes your extra effort and rewards you for showing up when your employer or your community needs you most. Up next, we will talk about another group of workers who depend on tips for their income. There's a similar tax break there as well that you will want to hear about, so stay tuned. Let's move on to a part of the bill that will matter for millions of people in hospitality, restaurants, personal care, and other service jobs. Trump's big, beautiful bill includes a new partial tax break for tip income, which is huge for workers who depend on tips to make ends meet. Instead of making tips fully tax exempt, the bill allows a deduction of up to $25,000 in qualified tip income. That means if you are a server, bartender, rideshare driver, hairstylist, or anyone working in a tipped occupation, you could reduce your taxable income by as much as $25,000 if you meet the qualifications. That is a powerful way to protect more of your hard-earned dollars, especially in an industry where paychecks can be unpredictable and heavily reliant on the kindness of customers. It is worth repeating that this can mean real money for workers trying to pay for housing, gas, and groceries in today's expensive world. The bill still places income phase outs on this deduction, similar to the overtime break. Single workers with taxable income above $150,000 or married filers above $300,000 will see the deduction reduced. Also, specialized professions like doctors, lawyers, dentists, accountants, or any business where people pay mainly for skill and expertise do not qualify for this deduction. But for the majority of service workers, this is a true lifeline that could ease tax burdens and help them stretch their budgets further. For many people in restaurant, transportation, and personal care jobs, tips are what keep the lights on, and this new deduction finally gives them the respect and recognition they deserve. Keep listening, because next we will cover how small business owners and gig workers can also benefit through a powerful permanent deduction that could save them thousands of dollars every single year. Now let's talk about a game changer for business owners, side gig workers, and self-employed people: the qualified business income deduction, often called QBI. Back in 2017, this deduction was created to give small businesses a break by allowing them to deduct up to 20% of their qualifying business income. That meant someone making $150,000 in qualifying earnings could potentially deduct $30,000 before calculating their taxes, which is a huge deal. The problem was this deduction was supposed to expire in 2025, leaving many entrepreneurs and self-employed folks worried about a big tax hike. But Trump's big, beautiful bill changes all that by making the QBI deduction permanent. That means if you own an S corporation, run a partnership, file as a single member LLC, or even earn side gig income as an unincorporated contractor, you can keep claiming that 20% deduction without fear of it going away anytime soon. Even better, the bill increases the income limits for qualifying, raising the thresholds by $25,000 to $50,000 depending on how you file. That means more higher earning business owners can qualify for the QBI deduction, even if they were previously phased out. There are still some restrictions for specialized service trades, just like with the tip deduction. Professions where the skill or reputation of the individual is the main draw do not qualify if their income is too high. But for millions of small business owners, this permanent extension is a blessing that lets them plan for growth, reinvest in their companies, and keep more of their money in their communities. If you are a retiree with a side hustle or you have a family business, this could be the most important part of the entire bill for you. Coming up next, we will break down another huge advantage for business owners and investors: the return of 100% bonus depreciation, which could dramatically change how you buy big business items. Next, let's explore a powerful tax incentive for business owners and investors: 100% bonus depreciation. In simple terms, bonus depreciation allows you to deduct the full cost of qualifying business property in the year you purchase it, instead of spreading those deductions out over many years. Before this bill, the deduction was going to shrink to just 40% in 2025, making it harder for small businesses and investors to afford necessary equipment or vehicles. But Trump's big, beautiful bill brings back 100% bonus depreciation permanently, which is a huge win for people trying to grow their businesses. That means if you buy qualifying equipment, furniture, vehicles, machinery, or even certain big items like aircraft or boats, you can fully deduct that purchase all at once after January 19th, 2025. For many entrepreneurs, that means freeing up cash flow immediately so they can hire more people, expand their business, or just survive in tough times. This is not just for giant corporations either. Small business owners, self-employed tradespeople, and even gig workers who need vehicles for work could benefit from this provision. If you are a senior running a small side business, you could use 100% bonus depreciation to buy that delivery van, equipment, or even tools and write it off the same year. That is powerful because it lowers your taxable income right away, which can be a lifesaver when margins are tight. The bill basically encourages business owners to reinvest in their operations, helping both the economy and their own communities at the same time. It is a bold move that puts more dollars in the hands of job creators and risk takers. Next, we will talk about an equally strong provision for innovators: the full 100% expensing of research and development costs, which could spark more inventions and improvements across the country. Let's dive into another big piece of Trump's big, beautiful bill that could change the game for innovators, engineers, and entrepreneurs across America: 100% research and development, or R&D expensing. Traditionally, businesses had to spread out their deductions for research and development investments over several years, which made it harder to recover costs quickly. But this new law makes it possible to fully expense 100% of qualified research and development spending in the same year the costs are incurred. That means if your business spends money to develop a new product, improve a process, invent a formula, or build better software, you can deduct all those expenses up front instead of dragging them out year after year. This can save businesses massive amounts of money on their taxes right away, encouraging them to invest even more in the future of technology, health, green energy, and other important industries. This change is especially important for small businesses or startups that are trying to bring new ideas to market but do not have deep pockets. Being able to write off 100% of those development costs in year one means more cash flow to hire employees, expand production, or protect intellectual property. Seniors who own small companies or family businesses with innovative products could also benefit from this because it makes the costs of keeping up with the times far more affordable. It is a policy that could inspire more homegrown American creativity and keep innovation strong on our shores. And that is good news for everyone because breakthroughs in medicine, clean energy, and technology end up helping entire communities. Coming up next, we will take a closer look at how the Opportunity Zone program was extended and expanded to help keep investment dollars flowing into neighborhoods that need a boost the most. And now let's explore a part of Trump's big, beautiful bill that focuses on bringing investment dollars to communities that need them most, the Opportunity Zone tax credit. If you have never heard of Opportunity Zones, here's a quick explanation. These are designated areas, often in struggling neighborhoods, where investors can put money to work while receiving powerful tax benefits. Before this new bill, the Opportunity Zone credit was set to run out, which had many investors worried about whether to keep supporting these projects. But now, with Trump's big, beautiful bill, the program is not only renewed, but enhanced. That means investors can keep deferring or even eliminating capital gains taxes when they invest in qualified Opportunity Zone funds. In plain language, it encourages people to put money into housing, businesses, and community projects in areas that have been left behind without facing a huge tax bill on profits. This extension will help pump money into neighborhoods that have been overlooked for far too long. It can lead to more affordable housing, more local jobs, and better business opportunities for residents in those zones. Even seniors who invest through retirement funds might benefit if their portfolios include Opportunity Zone projects, since the underlying investments could grow tax-free under these new rules. It is a creative way to reward investors while uplifting communities that need more resources. By making this program more predictable and stable, the bill helps make sure the dollars keep flowing where they can do the most good. In the next section, we will tie all these tax breaks together with a quick discussion on the importance of tax planning so you can use these new benefits to your full advantage and protect every dollar you have worked so hard to earn. As we wrap up, let's talk about what all of these tax changes really mean for you and how smart tax planning can help you make the most of them. Trump's big, beautiful bill is filled with benefits, from lower tax rates to higher deductions, bigger credits for children, powerful breaks for seniors, and expanded opportunities for business owners and investors. But to truly maximize these dollars, you need a plan. Well, it means taking time to review your personal situation, whether you are on Social Security, working full-time, or running your own small business. Look carefully at what credits and deductions you qualify for. For example, you might be able to stack the senior deduction with the permanent standard deduction, or combine the child tax credit with the new overtime deduction if you are supporting a young family. Takes a little effort, but it is worth it because every dollar you save in taxes is a dollar you can put toward your retirement, your children's education, or simply living more comfortably. You also want to keep good records, ask questions, and talk to a trusted tax professional if you have complicated income. Some of these deductions, like for tips, overtime, business equipment, or Opportunity Zone investments, come with strict rules and phase outs, so it is important to get the details right. Do not wait until tax season is right around the corner. Start learning now. That way you can protect your money instead of giving up more than you legally owe. Remember, tax planning is not just for the rich. It is for everyone, including seniors, working families, and entrepreneurs who need every dollar to stretch a bit further. By staying informed and proactive, you can take full advantage of these changes and set yourself up for a more secure financial future. Up next, let's close out with a quick reminder of where you can find more help and how to stay connected with Social Security Post. Thank you so much for spending your time with us today here on Social Security Post. We hope this detailed breakdown of Trump's big, beautiful bill has helped you see how these new tax rules could impact your finances, whether you are retired, working, or running your own business. These changes are complicated, but together we can make sense of them so you feel confident about protecting your hard earned dollars. Remember, from lower tax rates and bigger standard deductions to higher senior deductions, child tax credits, and business tax breaks, there are real opportunities to hold on to more of your money. If you have any questions about what we discuss, anything at all, please drop them in the comments. I promise I will personally reply to you because this community matters and I want you to get the answers you deserve. Also, if you found this helpful, please hit that like button and subscribe to Social Security Post so you never miss another update. This channel is all about helping you navigate retirement, Social Security, and taxes with confidence and clarity. We will keep bringing you clear, no-nonsense videos that explain what lawmakers and big agencies are changing and what those changes really mean for you. You should never feel lost or alone when it comes to your financial security. We are here to help step by step. So again, please subscribe, share this video with friends or family who might benefit, and remember to leave your questions in the comments because I am here to support you personally. Thanks for watching Social Security Posts, and until next time, take care of yourself and stay financially strong.